to the channel. I'm Osborne Foreman, and in this week's portfolio update I'm going to be showing you the UK stocks that I'm buying right now. And yes, I messed up the grammar in that sentence. No, that's not a love bite. I have no idea what is going on down there. According to the FTSE 100, no, that's wrong. According to Google Finance, the FTSE 100 is up by 0.6%. The FTSE 250 is down by 0.17%, and the S&P 500 is down by 0.62% as of recording this video. My portfolio has actually outperformed this week, and my shares are up 4.6%. However, it doesn't actually feel like my shares are up. And I have a feeling this is what I believe is recency bias. This is because my portfolio had quite a strong rally from Monday to Wednesday. However, shares had then been declining from Wednesday to Friday. So when I was looking at my portfolio on Thursday and Friday, it certainly felt a lot like the idea where, oh, my stocks are dropping, that's going to impact my mood, and hey, look, I feel a little bit worse. I'm not really impacted by mood of investments, but I was looking at it and thinking, okay, it's not that great of a day, whatever. But I wasn't really bothered. But I did notice that, and I think that's something to keep an eye on, because quite frankly, that means I'm a little bit bothered by it, even though it really isn't a big deal. Regardless, I'm up, and it's actually up a big amount from last Friday, and I think that's great news indeed. I wanted to mention that I'm actually building a new spreadsheet. My old spreadsheet in my portfolio is actually terrible, so at the moment, I'm looking into improving and creating one. So that will be coming around soon, and then hopefully I can give you accurate year-to-date figures and even give you pivot graphs, which I've only recently learned how to do really, which is quite surprising, and really show the kind of performance over time, with hopes that perhaps this will be better than using one of those apps that are always inaccurate anyway. And obviously, once you know Excel, it's like knowing another language. And if you like the video or just like to support the channel, please drop one of these to help beat that YouTube algorithm, as it is much appreciated. Boohoo is up 2.8% this week, and I've actually got quite the story for you. Debenhams obviously is a brand that Boohoo have acquired in the last year, and they've used quite a sum of their cash to buy it. Obviously, lately in Boohoo's trading update, they didn't give any like-for-like growth, so we are very much uncertain on how well the new brands are doing. Although people have speculated as to the idea that the newer brands are likely the ones pushing up the growth, whilst obviously the older brands may be struggling, and that might be why Boohoo are sort of hiding the like-for-like figures. I would be interested in that, and I will be detailed or reading the next annual report with very much a very scrutinous view. But this week, my nan actually bought from Debenhams. Well, somewhat. Basically, my mum assisted her. But she was after a dressing gown, as people do, and quite frankly, she was concerned because she was worried that Debenhams is going to be different, because it's not going to be the same quality. It's now owned by Boohoo, so obviously there's going to be some concerns there, right? And that's natural, because if something I regularly bought from, let's say I was buying from a game shop, and that was bought by a different company, I would be concerned at the kind of service that they deliver or the quality of the products. Although what we have seen is that at the moment, obviously Boohoo are selling down the outstanding stock that Debenhams had, and she is overall very happy with the quality and even happier with the price tag, because I believe it was something like 60% off. And I don't mean a Boohoo's promotion where they're like, oh, 30% off. Sorry, I don't know why I said it like that. But I mean actually the idea where it was 60% more when Debenhams was still open. And she was always wanting that kind of dressing gown, but just never got around to buying it. And so to see that she's now got one and it arrived the next day at 11 a.m, she is very much happy. And they even paid for the extra delivery as well, which goes to show that there is certainly an effective marketing stream in the idea of getting the next set of clothing the next day before 11 a.m. I think it was something like £2 for the delivery on that, and that is very much impressive. With that in mind, I think that Boohoo's target audience is certainly diversifying, and this is a very, very positive sign for the company, because quite frankly, their target audience at the moment, or at least prior to this acquisition, was between 16 to 34. This is now expanding out, and obviously some of their brands did target an older audience, but now they've certainly got bigger, well-known brands that perhaps are struggling now. But with time, they could certainly recuperate that brand loyalty and bring in an older demographic. That older demographic usually has a bit of cash to spare, and that certainly could be good for the Boohoo's growth and potentially be huge for Boohoo's future if done effectively. So it will be worth looking at Boohoo and keeping an eye on the management. But they have always delivered on growth. It's mainly ESG sort of concerns and governance in particular that investors are certainly worried about. With this in mind, I remain very bullish on Boohoo. It's probably my highest conviction stock at the moment. I bought an additional 138 shares. Although I do have very limited cash this week. I know I mentioned before, but I'm no longer working as a temp office role. I've gotten a full-time contract. I'm now in finance, which is a great sign to see. And this transition from weekly pay to monthly pay is a concern because at the moment there is a gap in this payment. The company themselves very, very friendly offered like a cash advance. I said, look, you know what, it's okay because I have got an emergency fund, albeit my business emergency fund, and I can use that to survive until the next paycheck. So overall, I'm pretty fine. And unfortunately, due to the nature of what I'm doing, I'm working in the office, but also doing some shifts here and there in pubs. So I can't really comment or talk about either of these companies. And so as much as I try to be as transparent as possible, please understand that I don't want to obviously breach any form of employment contract. And even saying this now is probably something that may be cut from the video because I do need to be very much careful. Either way, that emergency fund has certainly helped me out. Obviously, you don't want to be investing cash for your emergency fund, but when I had a weekly expense of putting £125 a week into the markets, I don't want to break that trend just for a few weeks, and I know I can recuperate that emergency fund relatively quickly and all other expenses can be paid for. Then I'll repay back the emergency fund and then getting invested in at a faster pace within about 2 months. And if you'd like to sign up to my stockbroker Freetrade, you can get a free share worth up to £200 when you use my link in the description down below. Argo Blockchain. Now this is a share that I had been quite quiet about for a while. Admittedly, I've not really been very bullish or buying many shares since I believe June or July this year. Well, they've had an abundance of news this week, starting with the idea that they've announced or proposed a public offering of 8.75% senior notes due in 2026. This idea would effectively mean that they would be able to raise something like, I believe, $50 million in capital, although now that I look at the page, I can't actually see that figure. So perhaps I'm just estimating that, or I've gotten it through I don't know where I'd acquired that knowledge, but I'm assuming it's that amount. This is good and bad, because at the moment there's a lot of fear, a lot of uncertainty, and a lot of doubt amongst the shareholders because obviously a lot of us got played. The CEO was certainly hyping the shares up, pushing them up. Look, we're going to potentially list, but we can't talk about it. But obviously it's very promising. We've got this huge facility that we're going to be building. They were over-promising and under-delivering. And quite frankly, investors catch on. Investors as a whole are not stupid. And eventually they will catch on, and that destroys sentiment. So lately, sentiment has been very, very much iffy, quite stagnant overall. And no, this is not a shipping forecast, moderately Sierra. Mess that one up. Regardless, the idea here of them taking some senior notes isn't a bad idea because, quite frankly, it's better than them diluting the shareholders. Obviously, they're going to have that capital that they raised from the NASDAQ, although I believe I mentioned last week that if they wanted to kit out that facility, and I believe this was with 800 megawatts, their Helio site in Texas, it would cost between $1.5 and $2 billion, which is a phenomenal number. And no, I was not about to swear. That is insanely high considering the market cap is like a third of that total figure. So obviously shareholders are a bit concerned. Don't get me wrong, we love the idea of growth potential in the future and that bigger facility, more Bitcoin being mined. At the same time, where are they going to get that money from? And typically what I've learned is that when you have an estimate for a project, be it like developments on a house, maybe you're getting an extension, right? Usually that budget gets blown almost every single time, and usually you need to add another 50% onto that, and at least then a bit more before you really estimated the costs. Don't get me wrong, they're going to have professionals estimating this, or at least I hope so, but overall that's still a huge sum of figure regardless of whether it's going to be higher than that or not, and so it does address some concerns. Their public offering of 8.75% senior notes is okay. Yes, debt is fairly cheap at the moment, but at a rate of 8.75%, that really isn't cheap. That suggests they are very much competent or very much confident in their business's competency at making or growing their earnings and revenue faster than 8.75%. Now, if I told you, what if Bitcoin, for instance, reaches all-time highs, maybe it hits 6 figures, and then drops back down like Bitcoin does. This may not happen for the longer term, but let's say it goes on for the next 5 years or after the due date of these bonds. What are Argo Blockchain going to do then? the share price is already going to be at question because their future mining revenue margins and expected multiples of their earnings is going to be obviously a lot lower. So obviously that is a big concern. And then they've also got to pay down this debt. So it really depends on how much they're really going to be taking of this debt. Don't get me wrong, in this industry, it is high growth. Yes, they likely could get better returns than 8.75%, and so there is some justification for it. And don't get me wrong, it's far better than diluting shareholders again, because at the moment they are very much exhausting all ways that they are getting capital, but they are adding more debt to the balance sheet if this gets approved. So there is obviously a lot more concerns, and at the moment I'm not buying more shares. There is more information on this, and there was an exercise of share options. When I saw this RNS notification, I was very concerned for about a minute. And then I clicked onto it, I was like, oh, here we go, right, exercise of 1 million shares. Right, and then I remembered, okay, actually the share pool itself is now a total of 468 million, meaning it was 467 million beforehand. So this dilution, even though the average price was it was 7 pence each, it really doesn't impact the overall share count too much. And obviously I remembered that share options had a lock-in period, I believe, were offered to some of the companies that had bought in or something of the like. I will admit I am ill-researched on this matter, and making this video has just highlighted that to me and that I need to look into it again. Not really a concern overall. It's such a small dilution, really not something to be worried about. But obviously, the idea of dilution or options being used is a concern to shareholders and has likely been holding Argo Blockchain back compared to other miners. Because when we look at their October 2021 operational update, it is pretty darn good. Their margins are higher this month of 86%. Again, this is their unique selling point. This is higher than many of the other, I believe all of the listed miners in the US and Canada. Although I think they are switching on and off their machines for optimizing efficiency, which is effectively inflating their unique selling point, which could be a concern. But then if it extends the lifetime of these machines, or in that regard, then perhaps this is more of a positive, because then they're getting more value out of it and perhaps less depreciation. They have also had a delivery of more machines, and this adds 220 petahash to their total capacity, and now they're at 1.295 exahash from 1.07 exahash. More mining capacity, very good. They've mined 167 Bitcoin in October, a slight improvement from September. It really depends when in October they got this mining expansion. And furthermore, somehow they've now got 2,128 Bitcoin or Bitcoin equivalent. Although in the recent updates, this doesn't quite add up. So I do wonder what they've been doing here. Have they really been acquiring some Bitcoin with some of the cash on the side? A very minor amount, I believe it's 1 to 200. Or perhaps Zcash, but then Zcash is a derivative, I believe, of Bitcoin anyway. So I don't think it impacts it too much. I would be interested to find out, that's for sure. But overall, it's a positive amount where they've mined 1,646 Bitcoin year to date. Now on Twitter, I follow a person, this guy is Ryan C. Basically, he had posted this screenshot. I'm not sure of the original source. And please note that the date on this is the 11th of the 8th, but actually it's probably the 8th of November because it's likely a Canadian or American date, because it was posted on November 8th. This is pretty interesting, and he was trying to highlight here Bitfarms and basically these four, well, other than Argo Blockchain, right? But what we can see is that potentially with the hash rate divided by the market cap, the overall percentage or the upside potential is 185%. I'm not sure how they've worked out the estimated share price increase, because it just looks like they've added 185 to 69% and gotten that figure. So I'm going to disregard that. But I am interested in the idea, okay, so the market cap of Argo Blockchain compared to its Bitcoin hodl, if that's how much it is, that's quite impressive. And that suggests that at the moment that they have got a very good book value and that there is growth potential in the future. And a projected market cap of $2.1 billion, obviously that's a significant move upwards, which is looking like 2.5 times return. I think this is quite unlikely in the short to medium term. But then obviously, as Ryan said, if Bitcoin goes up, we're all going to be going higher. But if it goes down, maybe not crashes, but there's going to be some volatility ahead, that's for sure. I would be interested to see, because it seems like all the other Bitcoin miners have got a planned hash rate for the end of 2022. I'd love to see where Argo Blockchain thinks that they will be able to fit in there. And I know Helios as a facility should be done by this time horizon. So it would be interesting to see where they will rank up. I have a feeling it's going to be less than Hive, But at that point, when they've got a higher mining margin and when they've got a greater hash rate to market cap, there is certainly some value in this investment. And then obviously we've got my portfolio spreadsheet here that is very much out of date. You can see how it's awful. And to note, my average price of Boohoo of £2.48. This is very much out of date. I'm going to be improving this, as I mentioned earlier. I'm going to change up the spreadsheet and add a lot. But I did want to point out Games Workshop. You'll see that I've not actually acquired any more shares of Games Workshop in quite some time. And this is because despite shares being lower or at a few month low, I'm still holding. My view is hold at the moment because there is some discontent amongst the Warhammer fan base. Don't get me wrong, Games Workshop taking up roughly 30.2% of my portfolio. I'm fine with this. I believe in the long-term potential of the stock. I think they're a quality company, but the way they are dealing with their community in seizing the community creators or content creators in the community and saying, hey, look, this is our intellectual property, get out. I'm not really a fan, or that's the door, which actually is quite, well, I suppose I've got two doors, so they could go left or right. Point here is that I'm going to agree with the Jefferies analyst, and we'll be keeping a close eye on any discontent in the community, as at the moment there certainly is. And I certainly got that idea when I was speaking to, obviously, the Games Workshop employee in the shop that I went into when I did my mini audit sort of thing. And when I was talking about 3D printing, because perhaps obviously some people can't afford these Warhammer figures and they will get 3D printed models instead, they were adamant against it. So obviously there is some concerns there. Don't get me wrong, I'm still bullish over the longer term, but this is certainly a chance for the story of Games Workshop to change. And if obviously they continue in this path, the story would materially change. This could impact their revenue and earnings. If their fan base, their loyal hobbyists are no longer loyal, then obviously that could be a negative a negative value on the shares and could be a valid reason to sell. So as I say, it's a hold at the moment. It's neither a buy the dip moment or sell or take profits. It's a case of hold and see what happens. But then I'm sure those that are buying in this discontent and believe over the longer term, it's obviously a little bit more speculative, but it's a quality company. But I'm sure they may be rewarded, obviously, if they were buying the dip. Now, I'm not opposed to that in any way. Also, you can see on the spreadsheet that my total growth returns, this may be an inaccurate calculation, so don't trust it too well. I'll take it with a grain of salt. I'm down roughly 4.5%. No complaints there, but certainly a significant underperformance if compared to any of the indexes like the FTSE 100 with 28% up, FTSE 250 with 51% up, and I'm not even going to look at the rest of them because quite frankly, that's embarrassing. But it is the short term, and I only started investing on April 7th of 2020. Yes, I put some money into an ISA between 19 and 20, but that was just cash. So obviously there is no real return there, and I only invested in equities on that day. So it will be interesting. Hopefully by the next few weeks, I'm gonna have a proper spreadsheet where we can track performance, and then I wanna give you as much detail as possible, and hopefully then it becomes more of a transparent channel. And then with the dividend portfolio, Dunelm Group is up 3.13%. I still hold roughly 9 shares. I've not bought any more. I also hold London Stock Exchange Group, which I acquired last week. I do like that. I love Refinitiv. I think they're a data and financial play, and I think that's great diversification in that portfolio. They're down 1.9% this week. I also bought a new book this week, and this book is called Richer, Wiser and Happier, and this is by William Green. I haven't actually started reading this, but I'd seen some impressive reviews on Amazon. I've left a link in the description, but please do bear in mind I've not read it, so I can't recommend it to you in any way. But I'm going to be starting reading this, and hopefully the knowledge in this book I will be able to share on the channel. And in fact, I've created a PayPal link. Obviously, I don't like asking for donations, really. I don't think, it feels cheesy, it feels cheap. The idea here is that I've got a donate a book PayPal link. I've left it at the bottom of the description. I'm not really going to advertise it. It's probably the only time I'm going to mention it, at least for now. And the whole idea is here, someone might donate 1 pence. And then once that adds up to a book, I'll buy another book. Obviously, as long as it doesn't get out of control and suddenly I've got to buy 8 books in a week and read them all because, quite frankly, I'm still human. But I hope that then the knowledge I could acquire from the book, I could find good recommendations and then obviously recommend them to you guys in the community. But also that knowledge in the book, I would hope would add more value to my videos, because if I'm learning more, if I'm increasing if I'm generating return on investment on my headspace, my mindset, then obviously I would hope that that rubs off on the content I create and adds additional value to those that are watching. So as I say, I've added that as an idea. And then because I'm conscious of space and I wouldn't want to hold too much, I can even look at the idea of saying, hey, you know what, I haven't got the space for some of these books, donate it to charity, or even just give it away. I hope that would just unlock a little bit more value in the videos, but I would love to hear your idea or your opinions on this, because quite frankly, I still feel a bit cheap putting that there. So I am a bit cautious of having it on the channel, and I very much care about your opinion or insight into this. In fact, I might even create a poll. Regardless, I hope you enjoyed this update this week. Thank you for watching. Have a fantastic weekend.